Good morning, everybody. Today is March 3rd, 2020, Tuesday, and the stock market will be closing in about an hour. Today I have a late show because I had to take kids to the doctor. But the main thing is this: the market was down, then the Feds decided to cut the interest rate by 0.5%, which actually made US bonds to yield less than 1%, which is a historical low. They've never been traded less than 1%. So if you invest in bonds, they will pay you only 1% interest a year, so which doesn't really make them super attractive, to say the least. So the interesting thing is that when the Fed decided to cut the rates, initially the market jumped because it was viewed as a positive sign that the government is trying to help the market. Basically, it allows companies to borrow money at a low interest rate or refi the current debts at a low rate, and basically makes the money cheaper for the companies and for consumers to borrow. However, it was such a sharp drop in interest rate. Usually they drop it by 0.25% and very slowly, but this time it was one big cut by 0.5%. So the market kind of realized that, hey, maybe we are actually in trouble, and the coronavirus, financially and economically is a big hit to American economy. So, and to stabilize the markets and to, I guess, inject more buyers into the market, the Fed decides to cut the rates and attract, I guess, more money to US economy. So but once the initial jump in stock prices was over, and it was over in a matter of minutes, then suddenly people realized that, hey, the situation is risky, and people start to unload the shares. However, the main, I would say, marker for the market, as I said in my previous videos, would be the number of infected people and the number of dead people from coronavirus in America and all over the world, but in America primarily. So yesterday the latest count was 5 or 6 dead people, all of them from Washington State, and so far, at least I have not heard about any new victims for the coronavirus. So, which means that, the game is very simple now. If we could control the number of deaths from the coronavirus, at least in America, the stock market will stabilize, and you should be able to jump in and buy stuff without worrying, if it's going to crash tomorrow. If this doesn't happen, then obviously we're in trouble, because the magic number, actually, for the coronavirus to be a more or less acceptable risk for US economy and for US stock market, I predict at around 100 people a day. Okay? Where I get this number? Well, we have around 100 people a day in America that die from car accidents. Okay? And even though every person matters and they're all valuable to their families and to their communities, but as we all know, for the country of 365 million people, a loss of 100 people a day is not such a major economical issue. First of all, it's like, for the economy, we don't have, so to speak, irreplaceable people, and this is just I guess, a risk or a cost that the society is ready to accept, because we've done it with car accidents, we've done it with regular flu deaths that are, you know, happening at around the same rate. So that's the target. Right now, we're nowhere near 100 people a day dead from coronavirus. Right now we have like 6 in like basically 2 months. So, but at the same time, it looks like we don't have that many infected people. So if, for example, if we achieve the infection rate of, let's say, 1 million people, and they say that the death rate from the coronavirus is 1 or 2%, we're talking about 10 to 20,000 people dead, because that's 1 or 2% for 1 million infected is. If we have, just in comparison, you know, from a regular flu, I think I read that there's 3 million people that are usually sick with flu in America over, let's say, 1 year, which is, I guess it's only 1% of the population. And out of this 3 million people, you know, we have just like a point, like maybe 1% dead people, which is about 30,000 people or 100 people a day. So, but that's basically the target for the coronavirus epidemic. So if it goes above that, then obviously it's going to create a mass panic. But even if we, you know, even if we climb, because right now we have like 1-2 people a day dead from coronavirus. If we start climbing to 100 people a day dead from it, that might spook the markets, and I mean, that will spook the markets. That will kind of like jitter investors, and they will try to pull their money out of the market. But we need to see. So at this time, you know, the market is jerky, but there are definitely great stocks to buy on the market, especially in the pharmaceutical and healthcare sector. Also in the cleaning sector, because we're using a lot of disinfectants to kill the virus, you know, in the buildings and in public transportation, restaurants, any kind of public places. So this type of stocks are actually listed in #1 stock picking app for iPhone, iPad, and Apple TV. It's available via the website 2stx.com. If you go to this website, it will take you directly to the Apple App Store, where you could download, install, and run this app on your iPhone, iPad, and Apple TV. And it rates over 5,000 stocks with daily buy and sell recommendations, so you could make some good profitable trades. Thank you for your time, and good luck trading.